Hey, it's Bob Ichino, and did you know that recently the People's Bank of China stopped buying gold? After gold hit a record high in May, China stopped buying. Now, some people think they're done. I don't, but that's beside the point. After gold hit its highs in May, China stopped, and that ended an 18-month buying spree that China had been on, and I don't think they're done for a couple of key reasons. They were the biggest institutional buyer of gold during this period. And this, let's call it a pause. Well, let me change it up. Let me tell you why I think it's a pause. Because China is the main economy in the BRICS nations, which is a group of nations trying to get away from being dominated by the US dollar. A lot of causes for that we can talk about another time. But one of the key factors, and they just talked about this at their BRICS conference, which is only about 8 or 10 days ago, they're trying to create their own currency that the working title of that currency is the unit. But either way, the structure is going to be that it's 40% backed by gold. So of course China's accumulating gold. 60% of it will be backed by just a basket of the other fiat currencies from the BRICS nations. But 40% will be in gold. Now there's another thing that happened that kind of escaped the headlines. The petrodollar agreement, which was put in place June 8, 1974 between the US and Saudi Arabia, that forced Saudi Arabia to sell oil in dollars and then reinvest those dollars in US treasuries. That was allowed to expire on June 9th of 2024, this year, just last week, as a matter of fact, by both Saudi Arabia and the Biden administration. So why was this allowed to expire? There's a lot that goes into that, but what does it mean for gold? Well, if Saudi Arabia is not collecting exclusively US dollars that they have to reinvest in treasuries, that means the treasury has to find other buyers for whatever amount of crude oil is sold in another currency. And they've already said they're going to sell it in yuan. So where are they going to find those buyers? The Fed. The Fed is going to be the main buyer. So what does that mean? Whether they're in pre-announced quantitative easing or not, they're going to have to print more dollars to absorb all of the treasuries that are being offered to the market by the Treasury Department. That means more dollars in circulation. That means a weaker dollar. That means stronger gold. Now, long term, that is absolutely what it means. Short term, we have gold off by about 5.25%, which may be what China was waiting for to start buying again. We won't know until they've already resumed the buying. But I think that's the reason. I think they were looking for lower prices. But either way, the long-term outlook for gold, to me, is unmatched. But you don't have to listen to me. Maybe call the guys at Golden Crest Metals and set up a consultation and see what they think and compare my opinion and theirs, and then do your own research and see what you think about actual physical precious metals. Because I think if you're not investing in them, you're missing out on a really effective long-term investment strategy.